Good evening to all our live Facebook fans and also some of you who are our member. And also tomorrow will be our Puasa Day. I think all our Muslim friends, and for those of you who are Muslim, I'd like to wish you Selamat Berpuasa tomorrow. So tonight is the, I suppose, the last evening that you can feast on yourself, but don't overeat, as tomorrow we'll have to wake up early and shawwal, I think, if I got it right. So tonight we will be talking about what's happening in the US market, as well what we've seen recently on the last 2 or 3 days, the banking crisis. I'm sure you have seen some of the talks and matters that people have been talking about, but I will give it straight from the KLCI standpoint. Make it easier for you so you can understand what is the implication in tonight's special talk about the banking crisis and beyond. So welcome all our friends and also members and also some of the public audience in here. And don't forget, I'd like to wish a Selamat Berpuasa to all our Muslim friends tomorrow. Starting tomorrow will be the first day that will be kind of difficult, after being feasting on yourself so long. Now you have to puasa now. So I do hope that you will go through the day with a lot of happiness, I suppose. And of course, the market will continue to give us all kinds of challenges that we see in here. So let's get started, shall we, on the banking crisis and beyond, uncovering profitable opportunity in the KLCA. Thank you for coming, and do thank you for sharing this video in your timeline. Now, of course, what has happened right now in the Wall Street, many of you have seen, continue to plague, and also many of the public, those of you who are not familiar or have not seen the 2008 global financial crisis, will probably say that, hey, this is something again happening right now, 2008. All I know is some of you, if your memory can recall you, 2008, a lot of people lost a lot of job, and also the country has gone through some sort of economic collapse and turmoil. The 2008, we have seen even a spate of people committing suicide because they get into lots of debt in here, and all those so-called nightmare and all those events are coming back round to haunt many of those beings. But I was also there in 2008. I was already a fund manager at the time, managing a couple of millions in there with my partner right now, which is still my Sifu, Mr. Bill Wamai, managing our clients in here. We got through all our clients through the 2008-2009 financial crisis, and we got out of it, and eventually we actually made more money than we did going forward in here. So tonight I'll definitely share with you a couple of things that very important that's going on, and many people see the kind of resemblance that we're seeing tonight, and with the Russian-Ukraine war, and also we have the two most non-West powerful leaders, which is President Putin and Xi, meeting up in here. Then we also have the Feds coming in tonight. He's going to talk about whether interest rate is going to be rise within the backdrop of the Silicon Valley bank collapse that we've seen before, and also not to forget the 166 years of the Credit Suisse history, which is really go down the drain. And the news is some of those bondholder on the Credit Suisse, the AT1, additional tier 1 bondholder, will receive zero. Actually, they're not going to receive anything at all. And that's a spate of lawsuit, class action lawsuit has been filed against Credit Suisse after the takeover of the 166 years financial banking system by UBS at 3.3 billion, which is really cheap in that case. So many of the people were seeing this, hey, there is a lot of danger, there's a lot of crisis. But of course, those of you who understand the Chinese, Wei Ji, right, stands for danger and opportunity. This is something I always talk about in here. Anytime when there is a crisis, there is danger, there's always opportunity in here. Isn't it right? That's true. But again, many of us always talk about, where can I find the courage to take, or at least in here. So let me explain through the next 40 or 45 minutes and bring you into at least the end of this presentation, you will kind of understand what is behind the banking crisis inside and what are the opportunities available. Now remember, Wei Ji is always with us. In any crisis that you see, even when we see opportunity, we always need to know what are the risks in here. All right, so let's start with one of the investor that many of us know and we really grew up with since I was a little young man in here. And this investor that predicted the Lehman collapse, sound alarm on the next US bank failure. So when you see this kind of topic, a headline, and this is something that person that you admire to is no other than Robert Kiyosaki. That's right. Now I call him as the crying wolf of investment because he is a permanent bear, and right now he's talking about the greatest market collapse in our time. He did say it also in 2008, and he also said in 2022. He also said every year. He always talk about this, and his solution is always time to buy gold, silver, and Bitcoin, right? You know his thing in here. And at the same time, he tells people Bitcoin will hit 500,000 somewhere by end of the year. There's some people in predicting Bitcoin will hit 1 million by end of 2025. So there are many kinds of version in here. But more importantly, we must able to see between a con man and economist and also an investment grade. Now, how many of you had bought into Bitcoin when it was all-time high, still believing in Bitcoin, and today to see where it is about 28,000, right? 28,000. It went down almost 17,000, but now crossed back 28. Yes, I think one point of time it may go up, but the fiasco and the collapse of FTX and a few more Silvergate has sort of prompted many investors, especially conservative one. Maybe it's time to stay away from Bitcoin. Gold and silver, it's not too bad. I do have some gold in here, and we have seen today gold prices has gone beyond 2,000, just touched 2,000 and crossed back in here. And this is also due to the ever alarming of the collapse of the Lehman Brothers in here. So there's a little bit of background behind here. Now, the same time at this headline, you will see again using the motto Wei Ji. All right, opportunity, danger. At one point, there's a danger. Stock market will collapse, and this was on 8th of March in 60 days, right? Which means in 2 months. So March, May will be in collapse. Best-selling author and Lehman crisis. So when you keep this kind of headline and this kind of thing that comes to your head in here, all right. So no wonder the man in the street, which is you and me, will become confused. Or if you come and find out another statement like here, which is an opportunity, yesterday, 6 reasons why the stock market is poised to see the strongest rally in 2023 in over the next, let me just move this aside here. All right, 2 months, that's right, in 2 months, same time frame too. So who do you believe, right? Opportunity, danger, all right? So that's why we always talk about in here. Now, depending again who you talk to, tendency, those who sounded the alarm or what we call the crying wolf will tend to come into the place. The guy who beat the gong, remember that one? He will always get the attention. And similarly, people like Robert Kiyosaki and this chap Larry McDonald, and also another permanent bear, big seafood here. His name is Jeremy Graham. Another one, he just came out today, braced for an S&P 500 to plunge 50% and a painful recession to everything bubble that bust. And this is again coming up very popular in a lot of the news portal that you will see, another 50. So who do you believe in, right? So the question is depending what news comes out. So it's always good to dig some background in the people they are saying, why do they say so. But what have I found for my research is Jeremy Graham has always been a permanent bear. So the person can keep saying bear market, but we all know broken clock is right twice a day. Right? You see that point, right? So broken clock can also be right twice a day. And sometimes it does. So we have to take these people with a pinch of salt. And more importantly, we want to see not what they say, what does the price and volume action. Remember what Richard Wyckoff, we always say, right? Listen to not what people say during the talking heads or interview, but what does the price tells you in here. Definitely right now with all the stocks, we will go through some charts and to tell you where are all the opportunity, or is it a danger point in here, right? Now, having said all this, I think it's very important, all this, how our brain will process information and how we see things. Even right now, as you watch this video, right, either in recording or in live, you probably say, who's this guy Martin Wong in front in here? Is he a guy that you should be believing? What is he saying in here? Of course, those of you who have been following me some time, or at least remember, will know some of the principle and some of the methodology that we use here in Trade VSA, and a lot of analysis that we use. But what's more important, we all are burdened with a lot of information. That's right? Information overload. So the question is, this is very good from Clay Shaky. He said it's not information overload. Now even with the chat GPT that you've seen, right, some of the investment challenges and questions that you post on chat GPT, he's not able to answer to, right? And on top of that, we got lots of information, lots of email. We join lots of Telegram. We join in our friends' WhatsApp group, and we constantly been bombarded with a lot of the information in here. So what can we do about it? It's definitely in our brain is the filter, right? The ability to filter what is important, what is rubbish, what is conman material. And I think that's very important. The ability for you to filter. If you're not able to filter out, you will be overwhelmed with information overload by the end of the day, because there's a research that says that each day you're constantly bombarded with almost 4,000 so-called subliminal messages that comes to you one day, 4,000 in here. So the only thing that I believe is up here, our education. Now the question is, always I ask people, have you embarked on the education to turn yourself into understanding the world where we are, so whatever we see, that information come to us makes sense or not? So that's why our education can turn our own mirror into window of opportunity. And that's pretty much what I want to say tonight with the VC danger opportunity, is how much we understand about the world that comes around in here. So again, I'm going to quote Warren Buffett always say, right? When I will see opportunity, as I said before, I always try to see opportunity leaning more towards the potential gain side or net gain, right? And definitely overcoming my personal emotion, because a lot of time, a lot of us, we succumb to our emotion. We are very psychology driven, and our VSA 360 package, and also our workshop and all our education material is to enable not only having a good methodology, but able to overcome our emotion, be a rational trader or investor. In this case, right now, when everyone is fearful, all right, everyone is fearful, it's time to be greedy. Don't you agree? If you do so, please type it in there and give me a thumbs up. So I really want to pass this so-called motto or message to you before we get down to the nitty-gritty. Is that okay? Right, give me a thumbs up in here. And for me, why I see opportunity, it's something that I always flash this to my student and also to my clients in here, is the NASDAQ return over the last 36 years. There has only been 4 occasions, right, of down year, and definitely last year 2022 was a down year. And every time when there's a down here, you can see 2018, there was immediately the market come back up almost 40%. And you can see back in 2008, which is the global financial crisis, the market came back down. And we have to put the trust over to historical and also probability, and this is where we work on. Now if you look back at the NASDAQ in here, right, so far the NASDAQ return, let me just bring it up in here, is 16.5% return up to probably end of March. Now if you look back, just go back to this slide here, okay, and you can see averaging most of them about 30% or even 40. Let's say we're going on about 20% to 25%. We still got a possible another 10% upside from here. This is on NASDAQ, okay. Now if you look at S&P 500, all right, now S&P 500 has a return around the 20% or maybe 15%. So right now it has a return of 4.6% return. Now this is important because it plays into the kind of return they are looking for. Now if you have a kind of return that, no, I want 100% or 200% return, then definitely tonight it's something that is maybe too far or too low for you in here. Now we are talking about optimistic return in here, and there we can bang on and roll our money year in and year out. So this is very important, looking on the S&P 500 over the last 96 years in here, and it's right now only 5% return so far, and I think there's more room to go up in here. Now, of course, I'm going to bring out the biggest bank that we have in Malaysia in here, right? And also showing you just one more example in here. We won't be going through so much of it because today all the banking sectors actually are lumped in together. You can also use the smart Robie apps. Remember, there's a hot sector. You can type in finance in here, and the list of those shares will come up, which is green Pentagon and which is not green Pentagon. So you can use that too. But I just want to bring everyone attention, right, to the banking sector that we see right now. So on top of in here are the three biggest banks in here that we have in Malaysia: Maybank, Public Bank, CIMB. Now first we want to look at the sector. Now the sector is just up here, this one here, which is down 9%. All right, now why we want to look at the banking sector? Because it is like the father of all the child here. The child could be a public bank, Maybank is here. So if you just look at the sector, it will give you a best representation of it. So right now we can see banking sector from the old high, which was from last year October, is only merely 9% down. All right, so which we could see a possible maybe 10% to 12% up here. But definitely from here you can see public bank in a similar manner from October last year when it was high, right? Interest rate were much lower, right? And you can see down 14%, right? So this is because due to the interest rate being rise, and there is what we call a systematic worry that they have that some of our local banks were tied to the SVB bank or Credit Suisse or even any of the foreign banks in here. So that has always been the question. Now if you look back at CIMB, it is also down 11%. And one of those strongest banks that you see, Maybank here, are still holding on. And I'm going to share with you why Maybank did not fall as much as CIMB Bank and Public Bank is because of the asset that it has, and we will look at some of those assets that Maybank has, and all this are within the tools that some of you already are using it already, which I'm going to talk about in here and may already have it in here. So let's look at the banking sector for where it is. So last year, if you see from here, it is down, sorry, let me just go back here again. It was down 9% here. You can see here 9%. So it hit up the new all high here about October, and you can see right now the market in this area in here, right, it's actually at the support. So one way to look at it is to give it a couple more weeks, maybe 2 or 3 more weeks, and see how well this market is holding up. And I do think at this level, right, since the market has dropped so much, it's not going to collapse. I can tell you for sure. This is coming in from a very, very low risk with a high reward. Because why should the market, let me just bring this thing up here again, the laser pointer, should the market hold its ground here and started to push up, you will have a very nice upside from here around the 15,600 to 16,600 here, which is almost a 10,000 point move, about a 10 to 12% move in here. So those are the kind of reward we are talking about, especially you want to look at from a low risk, high reward standpoint, and again, looking from the opportunity side. Of course, if you look at the danger side, you will be asking, can go down some more or not? Or averaging down. So we want to use the methodology that we all been trained, VSA in here, to look for possible entry in here. And of course, some of the stocks that we are looking in here, these three banking stocks, CIMB, Maybank and Public Bank, will be one of the strongest banks. And of course, depending on chart and market cap, you can look at some of the banks which are trading at lower prices, maybe like ABNB or maybe other banks. So, but most of the banks like Hong Leong Bank is around $20, 20 ringgit or more. So let's look at the next one that we have inside here is Public Bank. Now you can see Public Bank here has fallen more than 14%. Let me just bring that up. Okay, sorry, I apologize. That has fallen more than 14%. Now this is from our Smart Robie. That's right, our Smart Robie has all the fundamental data, and you can see 3-year KAGE, 3-year cumulative average gain is about 14.2% in here, 14.2%, and market cap is about 77%. Market cap is about 77 billion, and it pays a 4.2% with a ROE of 12 times, which is higher than the sector average with a PE of 12. So it is slightly undervalued from the standpoint we are seeing in here. So this is where we are. So right now, even if you're getting it below $4, all right, you are looking at the dividend of around maybe 4% in here. So this is actually a good, right now we are getting a red pentagon. This is a weekly chart in here. I believe this is, yes, this is a weekly chart. So we will go on to the market timing later to see what is a good entry point. Now, at CIMB, which is also down 11% from the high in here, where it was around 550, now doing 515. It has a P of 10 times with a sector average of 13, ROE of 9.8 with a sector average of 5.6, 5.3. Okay, let me just okay, so 5.3, and you can see here a dividend of 5% in here. So this kind of banks are paying. Of course, our Muslim friends will probably know these are non-Sharia, okay, because all the banking in here are non-Sharia. So you may not have a sizable position in here, depending whether you are sticky about this thing or not. And 3-year, definitely for our non-Muslim friend, this is a good stock to be looking at. 3-year KAGE is plus 15.7%. So that's a 3-year cumulative average gain of in here. Now, if you look from the banking sectors, okay, for Maybank is actually holding up very well. So some people may say, this one green pentagon, you want to buy it? Yes, you can, but always look from the low risk and reward. So this market had to hit new high, which means our KLCI have to hit new high, and you have to put your stop loss over here around 825. So from a risk to reward, this may not be a better stocks to look at, but we want to look at the fundamental too. You can see also pay a 6.9% dividend, right, with ROE of 9%, right, being the sector, which is almost at the sector average, and PE of 12.3 times. So this is not too bad, and it is more than 100 billion market cap, so really big in here, with a 3-year KAGE price of plus 12.9% in here. Okay, so these are the figures in here, and of course we also want to study, now that we have our three candidates, we want to study why does this thing happen. SHIT, you all know what's that, right? The banking crisis. Now we have to examine, first of all, what's happening today is actually more of the liquidity crisis in here, where the cash available to meet the daily demand of obligation, because when you put money $1,000, you must able to people to withdraw 1,000. So the cash availability was less than the demand, and we will examine why that thing happened for the SVB bank. Second one, right, is solvency crisis, where the liability is become more than asset. This usually happen when the prolong of high interest rate. When we get very high interest rate for a long time, guess what happened? A lot of people cannot service their loan. They cannot pay back, cannot service. So they will default, and sometimes this is what we call non-performing loan. From what happens as the asset, it becomes a liability. And when you get a lot of liability, and that's what really happened on the 2008 global financial crisis in here, we got a lot of people defaulting, and also banks, especially in the US, they went on and buying a lot of those subprime loan. Remember the subprime loan with properties? They are doing a lot of leverage in here. And then finally, the kind of crisis is contingent crisis, where one bank depends on another bank. This also happened when major banks pull together their resources and loan to a big startup company, maybe like 200 billion or 300 billion. When that startup cannot pay back then you can see from one of the bigger bank may have a 50% or a majority of that loan in here, and then it will happen to all those banks in here. But since the 2008, Bank Negara has gone through to address some of these shortfalling debit, and that's why we emerge, especially in the Malaysian context, our banks in Malaysia is one of the strongest in the world. And I cannot say that for pretty much on the other countries, especially in the United States, where a lot of the bankings are more relaxed, right, after we have gone through the global financial crisis, and early in the 1990, the Asian crisis in here, our banks are much stronger compared to the Western bank that we see here. All right, so liquidity is today's issue. This is today's issue in here is because there were a run in the banks. Now, of course, 2008 global financial crisis, which we talk about in here, many of us have a nightmare and very bad experience of it in here. How many of you have that? Raise your hand. If you have that, raise your hand, and I can definitely see that in here. So that is a lot of comparison in here to the 2023 banking crisis, especially some people who have not been through, like I went through the 2008. I've seen it all before in here. Now the 2023, it's quite different. It is a crisis of confidence. When a bank go through a run, which means everybody want to take money out from the bank, is where the cash availability to meet the demand, it did not happen. And that's what happened, because when people lose confidence in the banks, they will take their money out, and especially the older one. Some of our senior one will do that. Just imagine if you have lose confidence on the government, you want to take your money out from EPF, right? But you cannot. That's right. EPF has some sort of a control. Not until you're 55 you're able to withdraw, and it's actually part of the regulation in here. And in some ways, it is the same thing happening today. That crisis of confidence has been eroded. All right. So our modern banks work on what we call a fractional reserve banking, and I think many of you heard of this term before, right? So let's go through this. Basically, if you have one depositor like myself, I will go to the bank and I will deposit maybe 1,000 ringgit, and the Bank Negara and these central banks will have this RRR, what we call the reserve requirement ratio, RR at 10%, which means you can only need to keep 100 ringgit. By the law, you need to keep 100 ringgit, reserve it, and the 900 ringgit that you have in this case, you can loan out. Now, in the case of the 2008 subprime loan, a lot of these 900 ringgit, right, they were loaned out to loans that basically some of them don't even have collateral at all. So it was just bad loan, bad decision was made, and many of these loans that they lend out, just like I what I said before, right? Many of these people who have the loans, they cannot service it, and if you cannot service it, that 900 ringgit will end up to be 900 ringgit loss. All right, so you can see now what's happening in here, because the bank only keep 100 ringgit, 900 they loan out. So in this case, what the bank is trying to do, and this is based on modern economic system, right? And of course, some of you maybe will disagree. Well, how can they do that? Take my 1,000 ringgit, keep 100 only, and then loan out 900, because he or the bank in this case will know I will not go back and try to collect back that $1,000. Correct, because maybe the bank give them some sort of an interest, isn't it, as a service, right, in here. So the banks basically, what they're using, the economic system that they have, they call this the money multiplier. They use your money that you deposit in the bank and multiply it here. Now, from this example, you can see from 900 ringgit, right, they loan it to someone, okay, they loan it to someone in here, and then people take that 900 ringgit and they'll put back reserve 10%, 90 ringgit, and then loan out 810, and this thing goes on and goes on. So eventually the banks really only have, right, the system, in the whole system is about 3,439, but in only reserve is only 271. So you can see the impact it is. As more and more people have it in here, they will start building that so-called cash reserve, in this case in here, that almost everyone in the system, everyone in the country will have a piece of money in there. Now imagine now all these people already have money. The first person 1,000, second person 900, third person 810. But remember, the bank only got 271 ringgit. So just imagine these three person, if you add up 1,000 plus 900 is 1,900, plus 1,810 is 2,700 and 2,710 ringgit. Let's say 2,700 ringgit. But the bank only got 271. So if everybody go and withdraw from the bank, what happened? Tak cukup money lah. And why do they withdraw? Because they don't have confidence in the system, they don't have confidence in the bank, and they want to take their money and put under their pillow. Even the bank say that, hey, I can pay you later, I can pay you interest. They still don't want, they want to take the money in. Because people say, you don't take, the next person take, then that's what's happening in here. So you can see why this market really, and then sometimes you always ask the question, why does Bank Negara allow people to do this reserve ratio at 10%? Because the bank wants to stimulate money multiplier. That's how the economy works. This is modern economic system. Can they do it at 50%? Of course they can, but then you suck up a lot of liquidity, then you don't have a lot of cash flowing around, and when people don't spend, economy don't move, which is now what we are facing right now, right? People are not spending. You can see people are not buying things. The shopping mall are quiet. The restaurant, especially today, even I go to the restaurant, there are not many people in the restaurant. I'm sure that a lot of people now will tapao lunch because everything is very expensive. And the country need to get people to spend, right? If the person don't go out to the shopping mall and don't buy a car, they don't buy furniture, they don't buy clothes, what happened? No jobs. And that is one of the worst things that can happen to a country when you have high unemployment rate, and that's where you have huru hara. That's the worst part about it. So the modern economic system is to simulate things. So the whole point is to maintain the confidence on the banking system, maintain the confident people who is running in here, and not to have what we've seen in SVB. Okay, so let's talk about SVB. Now SVB is a Silicon Bank Valley in here. So what happens was, it was considered, because the media, especially right now with internet, everybody know information very fast, right? So first thing that happened is that, bank collapsed. Since Washington Mutual in 2008, this is the next biggest bank therefore. So if you look at it, it was founded in 1983 to service Silicon Valley startup. It's not your regular papa mama or this kind of people. It is for venture capital, and most of these people would have FIDC more than $250,000 in here. Some of them 50 million, some of them 10 millions in here. So it was a very big company in here. It has 212 billion in asset. All right, SVB as of 31st, and mainly Shopify, Pinterest, 44% of the US venture capital in here. Healthcare, they went in. So what has happened? They amassed large deposit, 189 billion in 2021, peak at 991. So what happened? They took this money and they invested in bonds. That's right. Now the bank stipulated that any money that you have, you can loan it out to people. But what they did, they didn't loan out people. They put it into treasury bonds. Now, of course, treasury bond works inverse with the interest rate rise. So if the interest rate is low, usually your bond prices are high. When interest rates are high, your bond prices drop. So what happened is that they bought their bond prices at very high price. So as interest rate goes up, which happened because last year, remember, I talked about US Federal Reserve, Jerome Powell, in order to tackle inflation, they had 4 times, 4 kali, 75 basis point, 0.75. So the rate that the interest rate goes up so fast, the bond prices all drop like birds, just run out of oxygen or jatuh. And that's what happened. So when bank realize this, they are making losses because whatever they bought 1 year or 2 years ago, those bond prices sudah jatuh, interest rate goes up. So this is the problem because the Federal Reserve is supposed to raise interest rates slowly, 25 basis point every 6 months or so. But they did not. They just go straight up like rocket ship. So bond prices also drop in here. So what has happened is that people realize that those on paper, those bonds, they were losing money because generally bonds need to hold those treasuries, the bonds that will hold to hold it to maturity. Means they hold it to the end when the bond expired, which it could be 5 years or 3 years, depending a bunch of them in here. But because people are withdrawing money, they need to sell those bonds to redeem into cash. because they have to meet the obligations, right? As I said before, the earlier example where 2,700 people, 3% with 2,700 ringgit want to withdraw, but they have 271, tak cukup because the IRR is only 10%. So as such that they have to sell to meet the obligation, and that's what happens. So when there's a run in the tak cukup, company bust. That's what happened in here. So if you look at SVB, it is a profit-making company, as I said before in here. This is from TradingView. You can this out from TradingView. You can see total revenue. Net income is about 23%. You can see here, with a PE of around 10 times. And you can see from here, the blue is the revenue. It's making money every year. With the exception of 2022, the margin drops. Okay, this is a margin drop. So at the peak, they were really making somewhere about 2 billion net profit. All right, making net profit in here. So when the interest rate went up, now this is a part where I want to share with you again. If you go to the statement, total asset as of 2022. All the time, current asset, which is a cash, they only maintain small amount, 17, 15, 14 billion. Okay, so in 2020, right, you notice where a lot of the startup deposit loan, so they got a lot of cash. But going to 2021, 2022, they did not maintain more, because what happens is that more and more of the startup, because of high interest rate, now they relying on their cash. Right, because they're not generating enough on their business, so they need to withdraw money from the banks to pay for expenses, to pay for payroll, and etc. etc. So as a result, you can see the amount of the cash has dropped. So what has happened when a lot of people found out that SVB was making loss on the bonds due to the high interest rate which they bought early on? People withdraw money. Hey, the bank lost a lot of money, If they lost a lot of money, can I still have money inside there or not? Because if you look at it, it only has about 14.6 billion, all right, current asset cash, but 42 billion was withdrawn in one day, right? That was the biggest run in more than a decade. Sure lah, no money. So I'm kind of surprised they have to sell a lot of things in here, because non-current assets usually are those which will take more than a year to convert. It could be property, it could be Bitcoin, some of those things in that they are not easily converted. So this is the maths here, right? 42 billion one day, but they only have 15 billion in here. So right now you can see the customer of SVB withdraw over more than 187% of the cash asset in here. Okay, so comparing to what we understand now, we always go back to what we first know. So very quickly after this bank collapse, they say, hey, this one maybe go back to 2007, 2000, and then a lot of people also start drawing the charts. This is what we call the wave. The Richard Practor wave 1, wave 2, wave 3. I can't remember what was the wave. So you can see from here they're comparing all the big wave in here, and this was 2008. The black one was 2023. So you will notice this is only up to January. By the time January the market actually peaked, right? It didn't go lower than where we are, and right now S&P 500 has hit 4,000 already, right? Which is the old high. The old high is about 4,100. So they didn't draw it. Right? So a lot of people always remember the bad news but never remember the news. But what's more important is that they could not see the volume. If I can put a volume, I will see at this point where the market have reversal, generally will have climatic volume at this point here and this point in here. So it didn't show here. So right now this is no longer valid, but people, like it or not, will always try to piece something that they can remember. 2008 financial crisis, sekarang pun bank juga kan, so crisis juga lah, so sell all the way. But I'm here tonight to educate all our members and all our friends and those of you that it is a different thing. 2008 global financial crisis was because a lot of the money which they have was invested in rubbish product or instrument like the subprime. Those are garbage one. Sure lose money over leverage one. A matter of time bomb. But today, many of those reserve that were used invest in treasury use. It's just that the interest rate gone up too fast, too soon. And that's why tonight it's very important that Jerome Powell realize this and should pause interest rate. Now this today on our my morning podcast, I did talk about the possible of June or July that the US Fed may do what we call a Fed pivot. A Fed pivot means they will pause interest rate and even cut interest rate going into September. So that's what's happening right now. Many people are talking about it in here, but again, subjected to change based on the statement that we will get from Jerome Powell tonight. I think at about 2 o'clock in the morning in here. So tomorrow we will see how the market will react in here. So as much as what we have seen, just like the rationale I gave in here, Goldman Sachs was one of the first one who called that the rate hike may be over. So right now, the question is, are they going to raise interest rate higher at 50 basis point or 25 basis point or simply just no interest rate stop? Now remember, all of us have loans. I have housing loan. A 25 basis point will means a few more 100 ringgit need to go into service the bank, and yet less for me to spend in day-to-day things, right? Remember, right? Let's say 500 ringgit, I can buy food, I can buy clothing, and this have a multiplier effect, which I've talked about, and helps the country or the economy do. Now, when you raise interest rate, that will go into servicing the banks, and the bank use this interest rate to actually lend out more. But remember, not many people are obligated or can apply to lend. So that's also another issue in here. They are not able to make the economy turn, and they are not able to get more people benefiting from the multiplier effect in here. So as a result, you'll see many businesses may pause, and we will see a rise in unemployment rate. So this is where I talk about the interest rate hike earlier on. If you notice, the last decade of interest rate hike in the US has always been pretty controlled, very controlled, where the steep, the angle, how the interest rate is rise generally are very gradual. Just like you climb mountain also, very easy. If you climb a mountain that is not steep one, right, can but the 2022, that until now, 2023, the interest rate rise has been like rocket ship, straight up more than 60%. This one is almost 60%. Usually there's about 45%, the angle versus the months in here. But the way this thing goes has caused the bank run and the bank crisis that we've seen in the Credit Suisse and also the First Republic, and you have the Signature Bank. And there's a lot more banks going to have this. This is why they want to ensure that the contagion are contained. Because a lot of these smaller banks, they are dependent on each other in here, right? Not so much of the solvency, but more on the liquidity and the contagion. So these are the two risks that the banks need to control before another bank like SVB. So tonight, if you go over the CME Fed Watch tools, there is a consensus or analysis from the CME Fed Watch where almost 90% believe. You see, the current target is 750 to 475, which is 4.5% to 4.75% in here. So they do believe 90%, right, will be 25 basis point. You can see 475 to 450, just 25 basis point rise. Whereas this is no right. 10% only. 10% believe there is interest rate pause. Right, you can see 450, 475, 10.7%, right? So 90%. So tonight, expect a 25 basis point by the time you get up early in the morning and the market is able to handle it. The question is 50 basis point. Wow, collapse, man. But if we do get zero, okay, no interest rate, you might see a big push in the US market. And if that's the case, we are seeing Fed pivot. And when Fed pivot comes, they will slowly cut interest rate, maybe as early as June and July. But a lot of stocks, I can tell you, starting April already will start to run. A lot of the tech stocks that you have, you can see the semiconductors are already moving. Even Apple is hitting the old high, 157. So check out some of those tech stocks that I talk about here, okay? Which is maybe something I'll talk about next week about the technology. See, depending how the interest rate will go. Now, on our local front, what we have seen is that a statement that has come out by RAM's Rating Services talks about how well the contagion effect has been contained in US and Malaysia, like it or not, we went through many of the 2008 and lesson learned. We have tightened a lot of the control that we've seen in here. So no impact. No impact. Collapse has no rating bearings in all our lender in here. And only thing is the ringgit currency, because of the interest rate rise going higher, the anticipation of the US dollar will be strengthening due to some of the funds repatriated back. So where are the banking stocks right now? Let's take a look further. When it comes to public bank, you can see the total cash is only 29 billion. Right, this is from TradingView, 29 billion in here total asset. Compared to the total overall, it's only 5%. So sometimes this is why we see public bank for what it is today, is because they don't have so much of a cash, and that's why you see this market falls. All right, so this is where we are now. If you look at here, definitely from the VSA 360, okay, VSA 360 again. We have the insider buying in here, and you want to check out the insider buying, the VSA 360. We did write an article in here why insider trading in KLSE works and give handsome profits. So check it out. Just type in KLSE insider trading. You can pick up this article and read more about it. So here we are seeing already EPF insider are starting to buy right now as the market has insight here, and there was a lot of call to buy in here. So for those of you using the VSA 360, it's something that you can check it out, or you get our 10-day free trial and have it in here. You can see the institutional are already buying in. Now on Maybank, which didn't fall much, has 116 billion. Compared to public bank was how much? Public bank only have 30 billion. Maybank has higher, 116 billion, okay, out of 900 billion, so more than 10%. Actually, it's very good ratio in here. Again, you can also see that Maybank, right, institutional are also buying. Right, you can see here institutional are really buying in here, and there's a lot of call to buy even at 880. Right now it's about 860 in here, so there's a lot of call to buy, and you're still gonna be enjoying that dividend. Or maybe some of you want to buy a bit of Maybank, buy a bit of public bank, and but don't buy all three banks. Just buy one of the other, Maybank, public bank, these two banks, and at least have some exposure to it. Or a combination of CIMB Bank and Maybank. Here you can see compared to total assets, which is 90 here, is 666. So not too bad, another 90 billion. Out from that, you can see only public bank cash balances are very, very low in here. Something with, and again, we do see a lot of insider buying in here. There were a couple of selling, but the banks, remember, institutional EPF, they are buying right now. And I do think at one point of time, give or take, this market will go back up very soon when you have insider buying already in here. Now, one of the big brother we should always take note is the US financial sector, which is why we are telling. One of them is XLF, okay? Now, when to buy? Very simple. Follow the green pentagon, all right? Right now, there's no green pentagon. Market starting to make up, and you've seen a lot of climatic movement here, which is really one of the first sign of market reversal is coming in here. And some of the XLF, what is it? It is an ETF which contains some of the most powerful and strongest financial institutions like the Berkshire Hathaway, Robert Buffett company, JP Morgan, Bank of America, Citibank, Wells Fargo, BlackRock, Morgan Stanley, S&P Global, Goldman Sachs, American Express. Rather than buying each, you can actually have some of these in the ETF. So pretty simple. Wait for the green pentagon, and I can tell you that we can see climatic volume in here, and it is time to buy. All right, so how to position to be buying an undervalued? Now remember, the banking stock has fallen 9% from a sector wise. This is also due to the contagion, so-called misinformation that flows into this market. Already we have seen the RAM agency has given that pretty much of what we have right now is already contained. So right now we need to identify market bottom. So one way is to pay attention to price and volume, especially high volume at the bottom in here. So we also see that some of the banks stocks has seen high volume, like what we saw on the XLF. Next, we want to look at the VSA relation. Who is in control right now? Who is buying right now? Definitely from the VSA 360, you can see a lot of the institutions like EPF, they are buying right now. So with the insider buying, we have the volume coming in here, and we are starting to see sign of strength coming in for a lot of the stocks. So check out the VSA 360, or those of you use Smart Robie to look for the SOS, and then your potential reversal will come in. And third, look for confirmation. Right now, the best time to be buying is when news are still bad. Okay, news are bad, but when news are started to be good from a certain influencer, defending an influencer like Robert Kiyosaki is a permanent bear. So it's important to guess, I suppose, the blogger or the guy saying in here, what is his background? Is he an economist? And is he a permanent bear? Does he look at the facts? Does he look at the technicals like what we do? We look at both technical and fundamental, and then we make an assessment of it. Again, education will lead to a window of opportunity. And right here you are. Or finally, number 4, to keep it simple, wait for the green pentagon and be ready, right? Of course, some of you will try to buy even before the green pentagon, especially our members who are already known when the green pentagon is likely to come out. So from here onwards, you can see what are the likely kind of returns that we're talking about using the Smart Robie. You can download a copy. Now, early on, you can see on the Smart Robie in here is the fundamental ratings. Public bank, if you notice, the grand return is only about 17%. Let me just move to the side here. You can see here, average yearly return is about 2% because we have the 23% fall in here. And the last 2 years hasn't been that great. Now, if you look at 2023, it's been negative 7%. So I do think that at one point of time, there is room for upside. Okay. And on Maybank, you can see grand return of 34%, average return of 4%. And again, market is still down minus 3.4% in here. So you can see it will register a positive. So it does give you that kind of a positive upside from here. And CIMB down 10%, yearly average return of 6% in here. And I do think there are room for upside from here. So on right now, if you're buying, wait for the green pentagon, you will be enjoying a 5% dividend, maybe less or maybe more, right? And the contingency, the contingent, how much the expectation is, has been contained. Right now, what's missing is the influence of good news coming in. It hasn't come out yet. Remember, we have to be buying on the bad news. So on that pre-tax in here, and I do think we have already reached that market. So right now it's just the last confirmation from US Fed chairman. If he's going to pause or give a 25 basis point, you can see tomorrow, right? A lot of the stocks started running. Now I did say early on, the recovery for KLCI, after all, it's been moving down for 36 bars. Very close to it, the market's going to turn back up again, right? You've been long enough in the market. And so that comes to the end of my banking stock crisis, and I've identified a couple of fundamental stocks as well of looking at it from the technical side, keeping it simple. So summary, there is still a lot of undervalued banking stock in play, right? The question is looking at the courage to take that position and do the calculation I talk about, understanding the risk and reward. Because right now, if you look at the banking stocks, the two smaller risks are CIMB and Maybank, CIMB Bank and Public Bank, right? Based on the risk to reward, right? Also, for those of you who's not familiar with VSA, right? Download the Smart Robie apps, which is totally for free, and allow time. And put in some money and test out the system in here, or join our VSA 360 and come to our some of our courses in here, paid courses, and learn more how the VSA do work. And finally, be greedy when others are fearful, which is right now. I mean, many people are fearful because of their misinformation and comparing 2023 banking crisis to 2008 global financial crisis. And definitely, not only you, many people out there don't understand that, and that market hasn't corrected itself. But more and more people are watching this video and learning about it, and eventually the market will turn, and you will see some of the banking stock will move back up higher. That's for sure, right? That's for sure, going for it. So that's all I have for tonight. And don't forget, join us in our Facebook at Smart Robie or Martin TF Wong, and use the Pentagon Guider and share it among with your friends, your colleagues during this festive season. Hari Raya, Selamat Berpuasa. And of course, that's all I have tonight. Don't forget to share this Telegram chat in the for all information that is educational, and we do hope that you benefited from our banking crisis and able to see the forest instead of the tree. Don't just see the tree only. See the entire forest for what it is, and you're able to see the opportunity that is presented. So for my Muslim friend, tomorrow, Selamat Berbuka Puasa, and had a great trading day again. Thank you everybody. Thank you and good night.